Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, June the 7th, 2013. It's Sunday, just around just afternoon as I record this video. I'm going to try to keep this analysis as concise as possible. For those that are listening early on, we have an upcoming CSTA Oakville chapter meeting with Bill Kerrigan on Wednesday. So check out the post out of the details for that information, and hope to see you all there. That's going to be the last meeting of the season until September, so I hope to see you all there. So let's jump into this market analysis, starting off with the Dow Futures on the daily chart. And at this point in time, I could use any color pen because I'm not really quite sure, what the market is going to do at this point. We closed the week right at a key line in the sand level. So that key line in the sand level was, let me just expand the chart out. So you can see we've been trading in this sort of channel, and I apologize, this is a little bit messy, but I'll explain why, because I'm looking at the market from a number of data points. So in last week's video, we were talking about, we had a potential double top here, and we weren't really getting above it. So what I was looking at was, and I took a trade off of here. I took a short on this day with the expectation of a move into the bottom of this channel or into 14,800. So this is 14,800. This was the major support level, in my opinion, for this move. And you can see that we came within about 40 ticks of that level. So essentially what we did was, when we weren't going any higher and things were looking negative, we broke this support level in and around here, around 15,155-ish. And then we came all the way down to this bottom channel, and then ultimately, we came down pretty fast into it was about 14,840. So we came in within about 40 ticks. So right in around that level. And this level was known support. This was a known fairly strong support level because it coincided, with the breakout of this area in and around here. So we actually were able to capitalize this on some short trades down to this level. I got out of the trade because I thought, this is a support level. I don't want to get greedy, even if it can come down to here. And ultimately, it did come down pretty close to there. So that sort of played out now. And what's not really clear is, let me just clear this off. What's not really clear is we pushed off 14,800 pretty strongly, and we're right back into this intermediate downtrend line, which is resistance. But if you notice, we closed the day really strong at that level. I mean, we probed above it a little bit on Friday, but then we closed right in and around that level. And some of the other markets that I look at, which we'll get into, closed right at their line in the sands too. So going into a weekend, it's hard to say, what's going to happen next week. So that's why I usually look at the market in terms of decision points. So in terms of decision points, if we close above this downtrend line, which is now the resistance, pretty decisively going into Monday, I'm going to be looking for strength back up to at least retest these highs. Because even if these are the ultimate highs, and I'm not saying they are, the market has a very complex sort of topping process at times, and it could take a while for this to sort of play out and then fail. Now, I'm not saying that this is the end of the uptrend, but we are getting quite long in the trend, and the first signs of weakness were a break of this downtrend channel, which we haven't done in a long time. Although it's bullish that it got bought up, automatically. So this is sort of the area I'm looking at. So that's one of the key points that I'm looking at to see if we're going to go higher. Now, the other scenario that I'm looking for is, we've broken this trend line. I'm looking for a move even up to, as long as we don't close above these highs, and then we come back down through this level, then I think that we're in for a trend change. So this is sort of a decision point I'm looking at, the break of 14,800 in order to get interested in the short side of the market. At this point in time, we've got quite a range here between 14,800 and these highs around 15,500 to just sort of chop around in. So this area could be this could become a a choppy area, and in that instance, what I'll be looking for is on an intraday basis where are we strong on the day, are we weak on the day, and I'll just be trading around the intraday path of least resistance sort of biases. I hope that makes sense. So let's look at some more further out analysis and some bigger picture stuff in terms of the Dow. Now we're pretty long in this trend, and you can see here when we kicked off this trend from this sort of cut pattern base and we broke out, we've been trending pretty nicely. And if you look at these moves, each one of these major swing moves, this sort of from 0 to 100% is a measured move calculation off this last swing. So in other words, what we did here was I'm looking at this area here, this low, and I'm looking at this high, and basically what I've done is I've projected, I've measured the move or the distance of this move, and I've projected it off of this low right here, and that brought us right into this area. So you can see that played out quite nicely. Now that sort of played out and we put in a minor kind of double top there, the question is, are we going to put in another leg up, similar to this distance? Now we're not going to really know that unless we actually start cruising to the high side and we break above these highs, and at that point a good portion of the move will already be over. So a break of this trend line, looking at a break of this trend line, with risk defined under that low is possible, but we are pretty long in this trend, so I'm very cautious on that. Now that that's sort of been explained, let me take this off of the chart and let's look at another data point. Let's look at this actual base pattern which we broke out of, and we from this major base, and that precipitated this big uprun. Now if we look at this as a sort of cup pattern and do the breakout extensions from this high and this low, you can see we've already surpassed, let me just zoom out a little bit so that I can show you the levels. Okay, let me just zoom out here. So we've already surpassed the breakout levels to the 1272 and the 1618. I'll just put those on the chart so you can see where those came in. So those came in at 13,764, 14,150. So we've exceeded those levels. Now the next major level from a Fibonacci perspective is the 2618 level. Now the 2618 level came in, we surpassed those levels, but we're now trading below them, and we're coming up right below them again. We traded above and we traded below, but those came in around 15,264. So as you can see, we probed above them where we put in the double top, above that level, and we probed below it, and now we're just below it at 15,208. So the question is the 2618 going to provide, sort of a zone where this move is done? So that's another question that at this point in time I can't really answer. So now that that's sort of been explained, let me remove that from the chart, that breakout extension. Now the other issue I'm looking at here is we've been very long in this trend. So at this point in time, the question is, are we really going to push higher, or are we going to push down into some support levels? So if we break down from this level and we put in a scenario like this, where we kind of do this, and then we break down back through 14,800, I'm going to be looking for a test of this trend line, and I'm going to be looking for the confluence of where that trend line maybe meets a relevant resistance or support level rather at the 50%. So if you look at the Fibonacci's from this perspective, let me just clear that off. You've got this low in place, you've got this high in place. A 50% retracement would bring you somewhere down into a test of this trend line into this zone. So that's what I'll be looking at if we break 14,800. If we break back up to the upside, then what I'll be looking for above this trend line and we hold this minor downtrend within this channel, if we hold the breakout pretty decisively, I'll be looking at risk defined below 14,800. And then what I'll be looking at is another measured move. Let me just grab the Fibonacci extension tool here. So we measured the last move from around this low to this high. And you can see where that played out. So what I would be doing is I would be projecting that off of this low that was put in around 14,800, and then I'd be looking for a move potentially all the way into, somewhere into 15,259, which would be a retest of the previous highs. And if we could get above that, then I'd be looking at 15,958. So if you can tell, I'm not really picking a side here in the market. What I'm actually doing is looking at, where the rubber's going to meet the road and where the actual decision points might be in order to stay nimble and in order to look at opportunities on both sides of the market at this point in time. Because, if you would have asked me a month ago, I would have said, you know what, I'm only interested in the long side of the market. At this point in time, because we're so long in the trend, I'm interested in the scenario playing out on both sides of the market. So I hope that makes sense. The path of least resistance is still higher. But having said that, we're very long in the trend, as I've mentioned a few times. Now, a couple of other indications that are sort of mixed here. You can see the MACD is pointing to the downside. Short-term stochastics have put in a bottoming pattern and are pushing to the high side in the fast stochastic. In the slow stochastic, you can see that we've come right down around the oversold 20% level, and we're starting to wrap up to the high side. So at this point in time, we've already had the bounce sort of play out. The question is the bounce going to continue above this trend line? Okay, so I think I've covered all the major basis points on the Dow, so I won't get into the analysis on the S&P and the Nasdaq, except to just take a quick look at those charts. Oops, let me do that. Let me look at the S&P futures. So the S&P futures look sort of the same. We've tested that 618 level. We've pulled back. To me, this market, even the position of the stochastics looks very similar, and you can also see that we have a, we've got this sort of intermediate downtrend line in play at this point in time as well. So let's look at the Nasdaq. Let's see what the Nasdaq futures have done. The Nasdaq futures have essentially the same sort of pattern. We were looking at the breakout of that cup pattern over the last few weeks, and we didn't put in a high above the levels that we spoke about last week. So I think the same analysis really holds. Let's look at the transports to see if they're giving us any indications from a Dow theory perspective. So if you look at the transports, they've sort of put in the same pattern, except that we had look at that. We had a 61.8% retracement off of that low to high. Now I sound a little bit surprised because I believe I put this these Fibonacci levels in last week when I was recording the video. I haven't looked at this instrument since I recorded the video last week. So this is really interesting, where we held 618 support of this last swing move. And if you look at, let me zoom in here on this action. If you look at this trend line, we've sort of broken that minor downtrend line with a solid decisive close off of there. And the stochastics look a little bit more telling in terms of the fast stochastic. The MACD is testing the zero line, which is indicator support for the MACD. But if you look at the slow stochastic, which is this cyan and white line, you can see the percentage, believe it's the percentage K is crossed above the percentage D, which shows short term, which shows intermediate term rather, momentum higher, and we're pushing back up above the 20 line, back to the upside. So this could be, we could get some more movement, at least from an indicator perspective, off of that level. So that's an interesting data point that I'll be watching in terms of the break of resistance and this the holding of support, and off of support the stochastics pushing to the high side on the slow stochastic. Now the fast stochastic is now overbought. So that's a little bit, there is a little bit of conflict between the two. But you can, you have situations where that can happen, like in and around this area, where you've got an overbought situation, you push to the high side, you pull down on the fast stochastic while the slow stochastic keeps moving to the high side. So that's and then it pushes down. So that's why I use both stochastics. One reacts a lot faster than the other. So I'll be watching sort of this pattern take place into next week and see if we're going to get a retest of the highs, or if we're just going to put in a lower high and fail and not even quite get up to the highs. So that's all I have there. Let's look at a couple of other markets. Let's look at the gold market, and then we'll get into some currencies. So I'm still in this gold trade, and it's been a challenging trade because the other day I was watching it and I was up. It's been a slow trade, but it's also been a challenging trade because I was up and now I'm taking some heat on the position. And the reason why is, let me just zoom in on this chart. I was looking at 1380 as the major level of support, and let me just delete this off the chart. 1380 is the major level of support. So essentially the way I've been managing this trade is I got into this trade somewhere in and around this area here, just above 1380, which I assessed was the intermediate intraday support. And I've been in this move since it pushed up. It came all the way back down the next day. And then I was looking for this breakout of this minor triangle here, or this pennant. And I kind of said out loud in the trading room, 1420 is going to be the next challenge point for this market. That being said, I was up decently in the position and I didn't get out. And I was actually looking for it to have a minor pullback and to push up into, 1438, 1440. But instead, I woke up the next morning and 1420 played out as the major resistance. And then what happened was we pushed all the way down with a 40 point move all the way back down into support, which put me down on the position. So we're really in a what looks like a box consolidation range. I would normally call this a dead zone at this point in time. As long as we hold 1380, I'm going to hold on to the position. If we start doing this and closing below 1380, even though we don't break the low, I'm just going to close out the position, and I'm going to be looking at resetting up this trade into July, where we get some seasonal historical seasonal strength in gold. Okay, so June is a historically seasonal weak period in gold. I did some analysis on that the other weekend, and I realized that after I got into the trade, which probably wasn't the best time to realize it, but I didn't take the profit when I had the chance. We're just at support, and we're just like the Dow, the Dow closing right at the line in the sand at resistance. The gold is closing right at the line in the sand of support. So that being said, these markets are a little bit tricky going into this weekend. Let's take a look at some other sort of correlated markets and see what's going on with them. Let's look at the silver. Silver's looking weak, but if I extend this line over, we're just right at that support level in and around there. If we break that level, we could come all the way back down to 20 like we did with this spike low 2022. I'd hate to see that, considering that would probably bode not very well for gold. Let's take a look at copper. Copper's starting to look like it's just going into a basing pattern. So if we really analyze these markets, they've really gone not really negative, but they've gone more neutral in terms of now they're just setting up a consolidation range and getting ready to build up energy for the next move, either higher or lower. So, sometimes you get into trades that all of a sudden they just decide, I'm not going to trend anymore. I'm just going to go sideways. I'm going to consolidate. And those are the kind of trades that you have to assess and say, well, should I stay with the trade or should I just get out and reassess when it breaks out to a new directional move? So that's sort of where I'm at in the gold trade. And the other instruments are sort of telling me that's maybe what's happening. Let's look at some key currencies. Let's look at the dollar index. The dollar index got whacked pretty hard, all the way back down to a 50% retracement, of that last move, but that's not really relevant anymore. Let's pull the fibs up to the recent high and low and see where we are in terms of the fib retracements. So this is interesting. We have the low, the relevant low, the relevant high, and we came right into the 618, and you can see we closed off of those lows at the 618 support around 8116. And if you look at the momentum indicators, they're oversold. We had a pickup in volume come in, which was sort of interesting. And now, you have the potential for the momentum indicators to push back up to the high side. So in the this sort of tells me that 8116 in the dollar index is intermediate support. and I'm looking for a pushback into, into some resistance levels. In the dollar, resistance could come all the way up to somewhere around there, or these key moving averages, that trend line, or the 21 exponential moving average, or all the way back up to test this key support level of 82.35 to 82.50. It's more of a range, 82.35 to 82.50. We could come all the way back up and test that previous support level, which wouldn't be unrealistic or uncommon. That would actually be, if we kind of flip the script on the fibs, that would sort of be probably a 318 or something, retracement of that low to that high, because it's below the 50%. So that's let's just put that on the chart and see what that is. So there's the 382. Yeah, that would bring us right to the 382 retracement of this high to that low. So that's I don't think it's an unrealistic expectations, and I think this is going to be short-term support in the dollar index. Let's look at the euro. Must be doing the opposite. Yeah, so the euro is quite looking strong here. Anyways, we've got some challenge points here, with these highs that we've just come into. And if you look at the fib retracement of this high to that low, we've come right into this 50 to 61.8% retracement resistance zone. If we get above $1.3358, which is this 618 of this move, that would put me, on the other side of the line in the sand between long and short. I like to use the 618 as a fib line in the sand between, market bias. So getting above 133.58 would put me more on the bullish side of the euro. At this point in time, we're just putting in some some early stage bullish patterns. But at this point in time, I'm not really expecting much of an expansion of the ranges that we've already put in. So I'm not looking for any great trending moves. I'm just sort of looking at these markets kind of breakdance fighting back and forth with no clear winner. So I hope that makes sense. Let's look at the let's look at crude oil. So crude oil it's really really choppy. It's been building up. I think crude oil at some point is going to make a decent move, because we've been coiling and just building up a lot of time in this market, and at some point we're going to need to make a directional move. You can see that it's just testing the zero line of the MACD. It's above these support levels at 86.91. It held these support levels down here around just $90.50. So I'm still looking for a breakout of the 618 or this 96.64 or 84. Can't really read that, to $97 level, and looking for a pushback into like $101, $102. Still looking for that. Hasn't really transpired. Let's look at natural gas. Natural gas got whacked pretty hard. We were talking last week about it potentially retesting these highs, or if it broke this intermediate low, potentially coming down to a 50 or 618% retracement. And that's exactly what happened. We had a break of these lows, which were intermediate support. You can see we had a bit of a bounce, and then we broke through, and now we're in the 50%. And we could come all the way down to 370 and tag the 618, which would coincide with a pretty decent support level going back in history. As long as we stay above the 618, I'm more bullish than bearish on the natural gas, and I'd be looking to see if these momentum indicators being oversold would wrap up back above the 20 off of that 618 level and push back up to the high side into some resistance levels and hold. Or if we break the 618 decisively, then I'd be looking for a retest of these lows around 330, 323, somewhere in and around there. Is there any markets we have not looked at that are relevant to the big picture outlook? Yeah, let's look at the bonds. I'm just sort of talking to myself here. Here's the 30-year bond in the U.S. market, and honestly, I think we're right at an inflection point here in this market. And we've been talking. Some of the guys have been talking about in our live trading room the possibility of interest rates going higher, and apparently some banks have announced some interest rates going higher. Now, I have not had the benefit of looking into that and quantifying it, but I've been of the opinion that interest rates need to go higher for some time now. I actually thought these levels were going to break back in around these tests, and then we pushed right back up to the high side to retest the highs. We're right back into that level. Now, the way I look at this, I look at this as a topping process, and I look at this as, you can only knock on support or resistance's door so many times before, they're going to open that door and it's going to break through. So that's what I'm looking at here. And when I see this, we've tested it once, twice, 3 times a lady. Here's the 4th. At some point, this level, if it lets go, which could be this test, or we could bounce and be a next test or a test after that. Timing this is going to be really tricky, but I think if we get a decisive break of this level at around 139 and 20-30 seconds, that's really going to kick off, probably a major trend change between, interest rates going higher and bonds going lower. Until we hold this level, until we break it, I think interest rates are going to start creeping higher, but I don't think we're going to get any significant movement. So we've got the first telltale signs. People are talking about it. Apparently the banks are starting to raise interest rates. So we're sort of looking at that, and I'm looking at interest rates going, I'm just guessing here, but at some point going to, 6%, 5-6%, and maybe pushing higher, the prime rate. So I'm going to have to take a little bit more in-depth analysis and look at that with some more quantitative measures on, the exact levels. But looking at these charts, I've been looking at this chart for a while. I think that, I think interest rates are going higher. That's just my opinion. I'm not going to trade it at this point in time. I'm going to wait for a decisive break of 139 and 20-30 seconds, and that will sort of give me a heads up if this market is maybe going to roll over and that scenario is going to play out. So I have a thesis, I have a theory, I have a sort of a proposal, not a proposal, but a scenario, and I really need to see the chart play out in order for, for that to confirm. So let's look at the 10-year. The 10-year is in the same sort of situation where we bounced off support, we bounced off of back into resistance, we're coming back down. 128 and what's this level? 128.21 is the level I'm looking at in the 10-year. I'm not going to bother looking at the 5 or the 2-year. I think the 10 and the 30-year give a better indication of that. So I think I've covered all the major markets that I want to cover. The only other market that I'm really interested in at this point in time is this is a chart of the soybean futures, and I'm not going to trade the soybean futures, but I'm looking at a pullback. I'm looking at a pullback because I think we're going to probably eventually establish a cut pattern, which could bring us all the way into, let's see here, all the way into this level at, 1714-ish. So we're about halfway there, and I think we have a lot of upside there. But I'd really like to get a pullback into, let's say, the 21 EMA, which is the cyan line, in order to establish a position in this market. Now, that's coming off of a triple bottom in this long sort of basing pattern. I do have signals on my weekly chart. I'll just show you those quickly. If you look at the weekly chart, and we look at the, where's my greens? Here we go. If you look at the soybean on the weekly chart, you can see that we have a Darvish squeeze to the long side, which could bring us up to 16-17. I think we could even go further into these highs. So I like this long basing pattern. This is a clear setup that I've been using for a long time. It's called the Darvish squeeze. You can read more about it on the Market Trading Concepts website, markettradingconcepts.com. You'll need to register for a free membership in order to access that information, however. So let's just jump back to, so that's one of the reasons why I like this chart. I like it both on the breakout momentum Darvish squeeze setup, and that has triggered, and I also like it on this reversion to the mean style chart. So it's gone breakout momentum. Now I'm looking for the pullback in order to get into this move. So the pullback could take us all the way to the bottom of this establishing trend line off of, this triple bottom. At this point in time, a pullback into the 21 EMA or a pullback into that trend line, I like it all. And looking for, continuation off of that sort of move there and just being patient and waiting, you know, for the pullback. If you look at where the breakout came, that would bring us all the way, the breakout out of this level, out of that established range, would bring us all the way back to the trend line. So I really like this. The question that I'm not sure about is, how am I going to trade this? I don't want to trade it in the soybeans futures market. They're just too crazy and leveraged for me. They go limit all the time. What I'm looking for is a decent ETF, and maybe trading a directional call option on that ETF in order to, you know, get in this market. So that's sort of what I'm looking for, looking to set up. I'll be keeping an eye on it. Hopefully I don't miss it. That's all I have this week. I hope it helps. This video went longer than I wanted it to, but I hope the analysis, the big picture analysis of the Dow at these levels and the technical aspects of it are helpful in sort of, you know, piecing together what's going to happen if you're in stock positions. You know, you should always be aware of what's happening with the broad indices if you're trading stocks, because, you know, typically 3 out of 4 stocks follow the broad indices, the indice measures. And, you know, these are some of the other markets I'm looking at, some of the challenges I'm facing in the gold, and some of the markets that are setting up and looking interesting. So I hope that helped. I hope it makes sense. We'll look forward to seeing you at the CSTA Oakville meeting on this upcoming Wednesday, June the 12th, with Bill Kerrigan, our guest speaker. Happy to have him there. And have a great weekend. Take care for now. Bye for now.